budget at least, seems to be this super rich tax which has added an additional surcharge on incomes above 2 crore rupees and 5 crore rupees. This impacts foreign portfolio investors as well, and their pleas to reconsider the tax on them have been clearly rebuffed by the government. But is one tax hike, which effectively impacts 5,000 assessees, the only reason for this downturn in sentiments? Because it's not just about the stock markets. Investor sentiments overall have been muted too. As the Modi government completes the first 50 days in its second term, we look at the policies so far and ask why the government that has been the darling of the investor community has now managed to leave this class so depressed. Speaking to me now on this is Swaminathan Aiyar, consulting editor at ET Now, Sadanand Dhume, resident fellow at the American Enterprise Institute, Kunj Bansal, partner and CIO at Sarthi Group, and Sheth, a senior journalist. Welcome to all of you and thank you for joining us today. Swaminathan Aiyar, let me begin by asking you if the assessment is correct, because this is one of those things that people talk about in dealing rooms, in newsrooms of, financial papers and channels, and no one really wants to come out and talk about it. But why is the investor sentiment down? Is it down, and what is troubling people? Is it just the super rich tax?
Investor sentiment is down because in the first place, there is a global slowdown. It's not limited to India alone, but there is a global slowdown. India is becoming part of it. It's becoming very clear that India's first 2 quarters of this year are really slowing down compared with before. So there is this short-term problem. Over and above that, there is this budget, which I would say was a grave disappointment to anybody who looks ahead. There were some very fancy targets. Okay, I'll have 8% growth. I will reach a $5 trillion economy. But if you looked at the actual steps, there was nothing in the budget to get to that particular limit. On the other hand, there were several undesirable trends. It was a protectionist, inward-looking budget. The fisc is under such stress that they almost seem desperate for money. This big hike in the income tax rate, it will accelerate the exodus of some rich Indians and some foreign portfolio investors from India, because it really is making India completely non-competitive compared to its neighbors. Again, to have a wedge of 17 percentage points between the maximum income tax rate and the new corporate tax rate, I mean, it is a recipe for tax avoidance. Why on earth was anybody going to pay? And you're doing all this for what? To try and get a measly 12,000 crores extra on income tax? I mean, with all the fiddling and exodus that takes place, you may not even get 1 paisa additional. And instead, you've discouraged so many people. The budget within it, I would say, has very little to enthuse people in the medium term. It says that, I'm going to protect medium and small industries in various ways. What kind of message does this send out to everybody else? It is a negative trend. Earlier on, you were talking about globalizing, reaching out to the best of the world, making the best of global opportunities. Instead, there is nothing in this particular budget to spur exports or make India competitive compared with its Asian countries. So as I said, both you have the short-term trend of a serious slowdown in the last 6 months, plus the fact that there's a budget which frankly is a bad budget. The combination of the two, I am not at all surprised that the Sensex has tanked.
It's not only about the Sensex, and though of course I'm going to Kunj Bansal next, who is very impacted with what happens in the markets. But people watching this show are beyond those who only track markets day in and day out. Kunj, the mood overall seems to be not very upbeat, but in the market specifically, is it this one super rich tax which has got sentiment pulled down so badly? Or is it foreign investors who are sort of showing their ire that the government is not willing to reconsider? What is going on?
So, the one-word answer to your question is, in my view, it is not the super rich tax that is affecting the market. But let's look at the overall scenario and put things in context. Yeah. And let's try to be a little bit objective also here. If we go till before the election result day or even till the budget day, there was this consistent discussion amongst all the market participants, particularly people like us, of course media like you and the others, that corporate earnings growth have not been there, and mind you, they have not been there now almost for 3 to 4 quarters. The macroeconomic numbers were not supportive, but the market was continuing to remain high. In fact, large cap indices were at life high, and everybody was wondering, why is that? Where is the dichotomy? Of course, the mid and small cap were not participating that time also, but nonetheless, coming back in the not so good macro and micro, the market was at a life high. Now we have seen the index correcting. The large cap indices, of course, in line, mid and small caps have also fallen. Even now, if we look at the correction in the large cap indices, is probably hardly around 10% from the peak, which is not bad. But yes, the way, the speed at which it has fallen and the short period of time it has fallen is probably making things look like really desperate. So coming back now, the answer to that question, which was there before the budget day, that macro and micro is not good but market is at a high, has been answered. The market has finally corrected. It just needed a reason for the correction. Probably the reason became the budget. Now coming specifically to budget, of course there are a lot of things, but I want to take, as I said, let's try to be objectively analyzing. Of course, being a market participant, I have been badly affected by this sharp fall in the market, but keeping that aside, there are two significant negatives, if at all, from the market point of view, if I want to put. One is, of course, this tax, which has affected the 5,000 odd or so individuals and FPIs. And probably another negative was the increase in the fuel price hike. Now against that, let's look at the two big positives which government gave. It gave 70,000 crores to public sector banks, and also it solved much demanded, much needed NBFC's liquidity problem by giving them the sort of the guarantee. So we can't say that it's the budget which is the negative. I think budget just became a trigger, just became a reason. The overall environment itself has been of a slowdown. Of course, we can keep discussing that why that slowdown came in the first place.
No, we need to
can
discuss.
that be attributed to the government? We can discuss that separately. But coming back, that's not the case.
Okay, so it's not just the super rich tax, it's an overall economic slowdown, and we will have to come back because we talk about policy in this show. The government has finished 50 days in its second avatar. This is a government which the investing community, the markets were cheering on to come back, and that was factored in some of the rise of the Sensex. So we're talking about the markets more as a reflection of a general larger economic mood and not just about markets itself. In that context, Sadanand Dhume, what do you think is disappointing people?
No, I'm glad you made that sort of distinction. I mean, I don't think that the super rich tax is that important per se, right? But it's important in terms of the signaling. What does this say? And I think we've had a presumption in general about India, which goes back, for quite a while now, that in general we believe that a strong government would be more likely to pursue the market-friendly reforms that many of us have been calling for a long time. That was one of the things behind what I think was irrational exuberance. I think the markets read it wrong. They assumed that a strong government led by Mr. Modi was going to be more business-friendly, be more market-friendly. But we had already seen the signs, in my view, over the last couple of years of the previous government, that Mr. Modi has taken the BJP sharply leftward in terms of its economic policy, much more focused on welfareism, much more focused on redistribution than growing the pie. His choice of Nirmala Sitharaman as finance minister should have sent that signal very strongly also, and that's what we're seeing. So in many ways, in addition to the global backdrop, which Swami talked about, what you're looking at is that the first serious signal that the Modi government has given both to domestic business and to the world is that we should not expect reform. We should expect the leftward turn of the last couple of years to continue.
That's an interesting point, because who is the signal really for? This is the signal which you're saying global investors are reading or the investing community is reading, but maybe the signal is for the large swath of voters who have voted this government back with a massive majority, and this government is talking to that constituent, which is the most important one at this point. Ninad, where do you come in on this debate right now? Is there a sense of almost betrayal because markets, investors, global investors looking at the kind of reforms we saw in term one, IBC, GST, etc., opening up of investment limits, foreign investment limits, were hoping for much more and more action on the downturn in consumer sentiment. They have been told that, listen, our bigger picture is pointing elsewhere, and you may not be as big a part of it as you think you are.
Look, one thing is clear, that Narendra Modi is no Margaret Thatcher, that there is not going to be a big bang reform in the years to come. However, I would still say that the budget was a mixed bag. The problem is that in this country you cannot win an election without a huge socialist platform. That platform needs funding, but funding the FPI is obviously an ill-conceived move. I personally think that the government should have rethought it. But the larger question is that can we then leverage other positives? There are many other positives. For example, the pain of restructuring the banks is a real pain, and markets will have to take that in the chin. You cannot on the one hand expect the banks to be restructured and there will be no pain. So I think that will be an unfair expectation on Modi. There will be pain in the medium run. India is also, one should not forget, doing the radical thing of sovereign borrowing, which will take away the pressure from the government borrowing in the domestic market and will therefore have going forward positive triggers. $10 billion or so is being talked about to be borrowed. It will develop the swap market.
Yeah.
So there are many positives, NBFCs, startups.
Ninath,
I
people
would
are not
personally
so
say
sure
that
about
this
the
is
sovereign bonds. Ninath, people are not so sure about the sovereign bonds. There's a variety of views on it. You have former RBI Governor Raghuram Rajan coming and saying it's not such a great idea after all. Then let me put into it.
Raghuram Rajan.
Let me put into it other factors which have spoken.
Raghuram Rajan is a naysayer for a lot of Indian things.
Yeah.
He's a naysayer for the Modi government. I mean, I personally think it shows confidence in the dollar, in the rupee. It also shows confidence in the government. It's a very culturally very important step to take money from abroad. Is a culturally and politically a very important step for a government to take. I personally think we should not have the second thoughts first. It opens up a huge possibility of lower interest rates. So I think that we should wait. This is a sort of a knee-jerk reaction. India is a $3 trillion economy, and yes, it will be socialist because 1.3 billion people, 300 million people on almost next to nothing, but that does not mean there is not room for maneuver. So I think going forward, we could see a lot of positives.
Okay, do you want to elaborate on that? When you say we should wait, two things that you've said, Ninath. You think we should wait and we could see a lot of positives. Do you have something specific in mind?
I see, I'll tell you what, fundamentally, if the economy grows and if the corporate earnings come back, even the FPIs will change their structure to corporate and avoid the tax. The whole challenge is, will all this money which is going to the bank accounts, all this socialism, will it add money to the purchasing power of a domestic consumption economy? If that happens, then it's a great budget. If that doesn't happen, or the cost of making that happen is very high, sure, then there will be a problem. And there will be some real costs, like I said, recapitalization of banks, etc. will carry some cost. There will be pain in the short run.
No, is this a short-run pain, or are we seeing a deeper malaise? I just want to come back to Sadanand Dhume on some of the points Ninath made.
Hang on a second. For the last 6 months, the FPIs were actually net buyers. We should not forget that. So there is a base from which this has fallen.
No, so I don't see how that's relevant to the point we're making right now. They have been net buyers and now they're spooked by attacks. I've been asking, hang on here. I've been asking that if it's all about the super rich tax, and what is the message and the sentiment that the Modi government is talking about to top investors, to foreign investors at this point. Sadanand, let's delve deeper into the point you made earlier about messaging. Is there messaging about investment will take place, we will encourage it, but on our own terms? This government is clear that it does not want to pander to the kind of cries and pleas that we've heard from top market voices as well, and from FPIs. In fact, a lot of tweets from top market voices in the last few days, they're not interested in pandering to it. There seems to be a clear plan.
I think that's a whole different dynamic. It taps into ideas of sovereignty, the government not wanting to be pushed around, all of that, and I can understand some of that. But coming back to Ninath's point, I think everybody who watches the Indian economy acknowledges that the political realities mean that there's relatively limited room for structural reform. However, if a government which is in its second term single party majority, its second single party majority in a row, 5 years away from a national election. If at that point the government is so obsessed with the politics of redistribution, that actually is something that should worry us. It's not, you could make these arguments. I think differently if you're sort of you're 6 months away from a national election or a year away. But if we're going to be looking at a government that is constantly focused and obsessed with what the last voter is thinking, even early on in its term when it should have flexibility, then what does that mean? The second thing, that is connected to this is that there should be, in my view, a greater sense of urgency. We've all talked about and debated the Arvind Subramanian growth figures.
Yeah.
You can disagree, but the signaling that we're getting from this government is that because they are politically strong or politically stable, it means that the economy is also on a strong footing. That's simply not true. The economy is not on a strong footing, and the government, instead of signaling complacency, ought to be signaling urgency in my view.
Okay, Kunj, you want to come in on that point that Sadanand has just made? I think some of that sentiment is also coming from a lack of acknowledgement of the current economic situation, whether it's in the budget, before that or post that as well, in the kind of commentary that has come from the side of the government. You first have to acknowledge there's a problem before you move to fix it.
Yeah, so there are two kinds of acknowledgements. One is, of course, from the government that has come of late, probably more needs to come. But before I address that point in more detail, let me briefly come back to the fact of acknowledgement by markets. Now, probably one of the reasons that these talks of desperation and that the government hasn't done anything and that we are doomed is happening because market has tanked. Now, assuming market would not have tanked, or assuming market starts to recover from tomorrow, will we start justifying it the other way around? And mind you, I have been in the market for 25 years. I am not trying to take any arrogance out of it, but this is what I always wonder, that do our views get shaped by the direction of the market or by the actual happenings in the economy? And let me tell you, it is indeed the first one. The direction of the market makes us look further reasons.
I'll come in to your point. I'll come in exactly to your point. There was a survey a few days ago which said that private investment in India has plunged to a 15-year low. Okay, then there has been enough surveys and commentary on consumer sentiment going down to all-time lows or massive lows. Auto sales are in a dismal state. I think in 8 out of the 9 months, you've seen a contraction in auto sales. Aviation is in trouble. Telecom is in trouble. So there is a larger story to this. I'm not picking up, Sensex Nifty rates from the last 1 week and asking what is the government doing. There is much more to this, and you know that.
Yeah, so exactly the point, that these troubles haven't come in Modi 2 or 50 days or the 15 days of the budget that has passed. It has been there for quite some time, and as I said earlier, that of course needs to be discussed, debated, found out, analyzed and corrected upon. But going back, that these troubles have not been there for the last 50 days. So the point was that the market was not correcting earlier. Now market is correcting, so it looks like now things have turned bad. As you rightly said, the auto sales have been down for 3 quarters. It's not a new phenomena. Of course, airlines, there was a different reason, that one whole big airline closed up, and that's why otherwise the traffic growth was still there and would have continued to be there. So the point is that let's also say that if we are saying that this government is marginal or not Margaret Thatcher, Mr. Modi is not Margaret Thatcher, let us not forget the 2 biggest jolts that we took on ourselves in the previous term of this government, that was demonetization and GST. Now, whether that were good or bad, one can keep discussing. But it is not that the government doesn't have the courage to do major reforms. It will happen. Also, let's keep in mind that in the process of reforming longer term the economy, in the process of increasing tax compliances, in the process of trying to find out Benami companies, trying to find out Benami land, a lot of reforms are undergoing. Of course, any democratically elected government in a country would have to address its populace first. But at the same time, can we ignore the fact that there was a heavy investment which had gone into the road construction in the last 5 years of this government? Can we ignore that the not exactly a very big growth rate, but a similar kind of allocation has been made in this budget again for the road infrastructure? No. So it's a part of the reform measure of the economy for a longer term good. A medium term pain is what, in my view, the economy is undergoing.
Let me take that to Swami. That's a very interesting point that Kunj has made, and you know, this the conversations that we've been having over the last few days with people off record most of the time also talks about how this government's insistence of doing things differently, whether it's the crackdown on corruption on the face of it, or larger transparency, or changing the way business is done, is impacting companies who have to figure out the new norm of functioning. Swami, is that a fair assessment, especially because we're talking about the second term of this government?
But, you know, the larger picture is this: is India going towards a competitive economy? The economic survey made it very clear we need to get into a virtuous cycle of higher exports, higher growth, higher investment, higher savings. A virtuous cycle. What does this particular budget do to improve exports, and what does this budget do for India to compete better with Bangladesh, Vietnam and other countries? There are more than 50 major companies moving out of China. Are any of them moving into India, or are they all going into Vietnam, Bangladesh and Thailand? If we have a situation where our exports have been more or less stagnant for the last 5-6 years, and other countries are increasing at 5 to 15%, that is where you have to look out. You know, the economic survey put it out very, very clearly. We need to get into this virtuous cycle within which exports are key, which means therefore India has to be competitive with the other neighboring countries. The problem with the sentiments expressed and the budget direction, Mr. Modi is still competing with Congress Party and Samajwadi Party rather than competing with Bangladesh, Vietnam and others. So I understand that in order to compete with the other political parties, you will extend PM Kisan and you say that we will have a large number of goodies for various people, we will help the small scale industries of various kinds. Okay. There's nothing wrong with having a welfarist slant. But are we getting to the point where the welfarism is coming at the expense of growth and competitiveness? That, I think, surely is the key issue. You're borrowing abroad, you say. Now, if you borrow abroad for consumption, in the long term, you are sunk. If you are borrowing abroad and this money was all going to go into an acceleration of capital expenditure, you could say that will be productive. What does the budget do? Capital expenditure rising at 6%, half the nominal rate of GDP. This is not a budget where the government says, I am going to take the lead in investment. No, the lead in investment say, I will leave it to the private sector and PPPs and other things. There is not enough money out there. So the government itself is going to be borrowing more and more, not for productive capex, but for various welfare schemes. The long-term outlook is not good. So I would say this is the real problem. India needs to be competitive in order to export. Without export, you cannot grow fast. This was extremely clear in the economic survey. It is completely ignored in the budget and subsequent statement. To me, this is the big overarching problem. If you cannot solve this, there is no reason for India to grow fast. There is every reason for India to go down towards 6% rather than up towards 8%. And if that is the case, there is every reason for the stock markets and for investors to be bearish rather than bullish.
A very interesting point you made, and I just want to come back to you on it, saying that this government is currently competing with other rival political parties. It's ironical because I don't think there has been a time in the recent past where the opposition has been so weak with such less of a voice and in such a weak position to actually counter anything the government does. So is it that, or is there a bigger picture that we're missing in terms of a plan that the Modi government has in how we deal with foreign investors and how they look at changing and transforming India from the grassroots? Maybe this whole welfarism versus growth debate that we've been having since ages is going to get turned on its head. They're looking at it very differently. Yes, Swami.
No, I don't think the aim is that much about inequality. Rather, the aim is that there was an original Modi aim of let us accelerate the economy and let us have more growth, which didn't happen. Then we shifted to the Amit Shah strategy of you must have enough goodies and subsidies and schemes so that every voter has benefited from at least one of government 5 schemes. This particular approach appears to have gone down well with voters. So the idea is let us continue on the same path where we always give some goodies, and you can say every family has benefited from one of 5. You have to keep this approach because even if you won a general election, every 3 months you are having another state election. You can have a radical reform which immediately creates losers and in the long term will benefit you. But it means that in the short run you will lose several state governments. I would say the eternal pressure of state governments is one of the problems that we are facing today. And because of the constant state elections, Modi remains constantly battling with the other political parties, and he is competing with them rather than competing with other countries because he wants to make sure he wins as many state elections as possible. This, I think, is a serious problem which is not going to go away. Modi knows it's a problem, and that is why Modi says, let us have simultaneous elections of the state and center government, which is not going to happen fast. So as long as you have the current situation where the BJP approach appears to be, let me have a large number of schemes so that every voter says some member of my family has benefited, this Amit Shah approach. If that is the emphasis, you cannot simultaneously have the emphasis on reform or fast growth. So as far as I can see, fast growth and reform is suffering, so that this particular Amit Shah strategy, which has been successful, will continue. That to me is a big overall minus in the political economy as I see it today.
Very interesting point. Kunj, you want to come in on that and also talk about what you would like to see change in the government's approach to the current situation. But first, the comment on what Swami said. That's a very interesting point.
Yeah, so I broadly agree that, and we discussed it also, that of course there is a continuous democratic pressure. By democratic I mean the pressure of the elections, and which is what is forcing, if it were an autocracy, if it were something like a Singapore Prime Minister, maybe I am sure, not that I am wanting to be pro-Modi or anti-Modi here, but having seen his working and his decisive way of working, he would have probably gone in for straight actions.
Yeah, let's be pro-democracy. I mean,
yeah, so exactly. So that's what I am saying. So because of those pressures, the measures to improve economy, measures to grow growth have to be slow. In fact, if you ask me how should it be taken, I am surprised why nobody talks of finally agricultural income should be taxed. You fix a threshold, you fix 5 lakh, 10 lakh, you fix 50 lakhs. But if it is such a high mandate,
you know, it's never going to happen.
Why not?
It's
Till 5-6 years ago, till 7-8 years ago, we used to talk that let me tell you that, let me give you just one example. Till 6-7 years ago, we used to talk that the deregulation of petrol and diesel prices will never happen. It has happened and nobody protests. There are no rallies, there are no political parties, there are no groups on the road when the prices go up. So I think it's high time if the government has to increase the taxation, and you are fixing the threshold. You are again bringing only the rich farmers, and of course you are right that one of the reasons is that there are vested interests. There are people who are declaring agricultural income as their main source income, and they are the ones who are probably making the rules. But probably something like that can be done, and that is where, once we have enough resources, is when this balance between going slow because of the continuous elections, against that, since you have higher resources, you can continue to focus on populist measures, but you will have enough resources to push the economy faster.
Okay, Nina, do you want to come in on the point of how the need to stay politically relevant and politically successful is going to hold back reforms? Though we've seen the balance in Gujarat when Prime Minister Modi was Chief Minister, and he's held that forward. Why is it so tough to push at the central level with such an overwhelming mandate?
There will be a democratic premium on the kind of growth that we, envisage in a classical free market economy. Let's be clear on that. Like I said, you are on a socialist platform, you have been elected on a socialist platform, but Modi 2.0 has such a huge mandate, and Modi himself, as you said, has shown in Gujarat a very different form of Modi, that I believe that there is a lot of space for maneuver. There is, for example, the whole idea of state-run disinvestment. Now that he can push. Modi 2.0, if it has to be successful, and if growth has to come, because without growth everything will collapse. I think Modi realizes that. I think he is sane that way. He realizes the importance of growth. So disinvestment may happen. There are a lot of other things which can happen. However, given the socialist platform, we cannot expect an American-style free market thing going forward. Immediately, there will also be pain. The pain, as I said, of restructuring banks. The pain of cutting away some subsidies which will probably come as the government matures and goes forward. So personally, I believe that Modi realizes that all this welfareism cannot happen if growth stops. You cannot kill the golden goose. I am hopeful.
Yeah.
Yes.
No.
I am hopeful.
Yeah, I'm coming to Sadanand. I'm coming.
That there are enough policy.
Yeah, you're hopeful. No,
there is enough policy.
I was just saying between this panel and people would be maybe listening to this and thinking that we're talking about some dystopian fantasy kind of world where agricultural income gets taxed, but the super rich tax comes down and subsidies get cut. Okay, Sadanand, bring us all back to earth. And let's talk about what's really going to happen and what we can hope for.
Let me just respectfully disagree a little bit with Ninad.
Yeah.
Nobody on this panel and nobody who writes about the Indian economy is expecting Narendra Modi or any other politician to take India towards what the United States is or towards Thatcher. So I'm just sorry, that's a straw man. What we are talking about is, are you going to be...
You usually do in your columns.
Wait,
but
the American Enterprise Institute stands for very different reforms.
Hang on, please.
Beat me anywhere in the last 3 years. 6 years ago, we were hopeful. The reality dawned, okay?
Yeah.
Nobody expected that. What we're looking for is reform within an Indian context. And for you to repeatedly point out that any criticism of even that is being measured against some ideal, not true. Secondly, coming back to Tamanna's point, on to something, not just elections, and there I kind of agree with me and Kunj. There's something deep going on in my view, which is that there are clear signs of a philosophical reorientation, and we should not ignore that. I'll just give you 3 examples: taxation, trade, and privatization. On taxation, there is a clear philosophical impulse in this government towards soaking the rich. That's what the super rich tax is about. On exports, on tariffs, there is a clear reversal of 25 years of post-liberalization policy. These guys believe in tariffs, they believe in protectionism. We've been seeing this evidence for more than 2 years now. On privatization, there is a clear sense that they don't want to touch that. That's a third rail. They're willing to pour more money into absolute dogs, whether it's like BSNL. Now, at some point, we've got to step back and add that to our analysis instead of just saying that, well, we think they want to do all these great things, but these elections are coming around the corner, and ask ourselves a different question. Do they really want to do the things that we want them to do?
Yeah.
And I would argue that the evidence, not of the last 50 days, but of the last 5 years and 50 days, suggests that the Modi government indeed does have a different outlook. It's not the outlook that those of us who are traditional market liberalizers want. We should continue to push for what we think are good policies that are going to help India. But at the same time, we should acknowledge that the shift that has taken place is a real shift.
Yeah, and maybe a reality check is the order of the day. Some of that, enchantment needs to rub off to see that this is a government that has been voted by a large mass of people, and their primary objective is to fulfill the promises to those voters. If it aligns with what investors want, well and good. If it doesn't, well, then you know what the priority will most likely be. Thank you so much to all of you for joining us on the show. We're taking a very short break, but we're coming right back on the India development debate to talk about the RTI Act next. An amendment to the Right to Information Act has been passed in the Lok Sabha. It's likely to get stuck in the Rajya Sabha. Why is it so controversial? We're telling you when we come back.
screw up we have to focus on
Unless you have knowledge.
Macroeconomy is in much worse
What matters most is who forms the government.
for opposition unity.
corruption on a grand scale.
I'm Abha Bakaya, and I'm going to be interviewing the country heads of some of the biggest MNCs here in India. From auto majors to tech to FMCG, we cover it all. A rare inside view of the inner workings of these giant companies. From consumer giants to e-commerce behemoths to global chains. How are they planning to win over the Indian consumer? Join me as I find out.
All new Mega MNCs with Abha Bakaya. Only on ET Now.